So you added during a short-term pullback. So what is your broader view about commodities? And are you talking specifically about energy companies? What about miners and also food traders?
Yes, thank you. Thank you to be back. And what we are talking more about is really more about the mining companies. And that's really because we saw a short-term pullback as China went into a lockdown situation. And as a result, valuation was looking pretty attractive, where longer term or in the midterm, we actually see commodity prices staying higher for longer. And if you look at the cash flow of these companies and the balance sheet, they are really, really strong. So giving you some defensiveness as well from a cash perspective.
Does investing more in these commodities companies, especially those fossil fuel ones, go against any of the renewable calls and drives that we've seen so far?
I think they will go hand in hand. So apart from, of course, investing in some of these commodity companies, and I'm talking about, some of the iron ore companies that would be important in the social building, as well as when China starts that infrastructure stimulus plan in handy as well. And we are also very interested in renewables, which at the same time, along with the sell-off in commodities, we are actually seeing a pull-off of the renewables as well. But due to a different reason, that's more on a growth to value rotation. But that's also where we are seeing very strong earnings visibility in such an uncertain time that we are talking about right now. So, better visibility, but lower valuations.
What about technology companies? Of course, they have been a bit expensive recently. We have seen a sell-off. Do you get into those more highly priced names?
I think we are generally a bit more cautious on the technology companies. And I think within the technology, it is a big term. So we got to break things down a bit. Where we are more cautious on would be those that are more highly priced names, those that have low profitability, and those that are more downstream, if you say, because that's when you have an economic correction, and that's when the first cut will happen. So some of these downstream names are actually seeing negative earnings revision, which is where we are being more cautious. So within technology itself, we have actually upped our quality game and moved towards where we see the highest earnings visibility and strong balance sheet. So I can't emphasize enough about the quality in such uncertain times.
We continue to see energy and commodities climb higher. What does that mean for transition investment opportunities and renewables?
I think what that means is that in the short to medium term, it will actually spur that transition, because from a cost perspective, it makes sense to do so. And I think the other side of the equation is that the renewables are actually declining in cost as well. So that cost factor is coming down. And therefore, from an economics perspective, it does make sense to actually speed up the transition. And from a longer term energy security perspective, or whether you talk about the concerns surrounding climate change as well, it is a path that everyone needs to follow. And therefore, we actually see that there will be an acceleration from here over the next 10 to 20 years. So really a longer term theme here.
What are you seeing as the currency effects across the region? Where do you see particular benefits or disadvantages?
In terms of benefits, we are seeing from, in Asia at least, countries that have been relatively more resilient, and that's really because their economies are supported more by, the commodities prices. So that would be the likes of Indonesia, for example, that they have been relatively more resilient. And where there are pressure, it tends to be in Japan, for example, that we are seeing a really weak yen. But I think as we discussed just now, it puts some pressure in terms of domestic consumption. But on the other hand, it actually makes, when Japan opens up, traveling to Japan extremely cheap as well. So you have that reopening play as well as the export opportunities. So the key among all this is to really select the right companies, considering the overall environment, which is very volatile at the moment.